So if you look at the actual margins of this company, you're talking about margins that are going to be grossly negative, yet analysts are saying buy this stock for 3 years. We think people are being misled. And we think as the competition comes in, we think guys like Tesla and NIO, who can't match the manufacturing prowess of the VWs and GMs, are going to literally get crushed.
So it's understandable, the enthusiasm around these stocks. I just caution that this will take longer than people think. And I would put it all together, Becky, and say this. If you're trading these stocks for a 1-year time horizon, that is a dangerous endeavor. Ultimately, if you're investing in these companies for 3+ years, that's wise.
Hey, I'm Steven, and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. If you've been waiting for another appearance from our favorite class clown, Gordon Genius Johnson, it's your lucky day. So in this video, I'll be reacting to and sharing my thoughts and opinions on some discussion between Tesla stock analyst and bull Gene Munster and the dunce, aka punching bag, Gordon Johnson, who may or may not be an oil shill. That's not an allegation. I'm just thinking out loud. I may also be high. Please do your own research. So let's get into the video. But first, hey guys, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. That is an obnoxiously good return on your investment. I mean, really, deposit $100 and you'll end up with, at minimum, $21 worth of stocks, a 21% ROI on your money.
And if you're in Australia, the UK or New Zealand, you can get a free stock with stake also using the link in the description. Let's get back to it.
The electric vehicle sector is one of the hottest parts of this market, and it's not just Tesla. Take a look at some of these stock moves. Chinese automakers Li Auto and Xpeng have doubled since their IPOs, while battery maker QuantumScape is up about 440%. But those stocks have nothing on NIO. That stock is up more than 1,600% just in the last year. That makes NIO worth nearly as much as Ford and General Motors combined. Joining us right now to talk about the EV sector and if what we're seeing is a bubble is Gordon Johnson. He's the founder and CEO of GLJ Research, and Gene Munster, who's the founder and managing partner at Loop Ventures. And Gene, I'll start with you. Let's talk about the sector overall. Do you think that the EV sector is overvalued at this point?
Becky, I want to start with an important learning that I've had in tracking these transformational tech themes, and it's they tend to take much longer than we anticipate to come to fruition, but in the end, they end to be much bigger than what we ever could have imagined.
This is a great opening point here from Gene. One great example of this would be the internet, which became publicly available in 1993, less than 3 decades ago. I mean, really. Just imagine you took a time machine back to 1995 and tried to explain this YouTube channel to somebody. Go, hey, yeah, did you know, in the future, some guy who's high all the time, who's really obsessed about this one particular company, could start making videos about that company, sharing his thoughts and opinions, and have over 3.2 million hours of watch time in just over the first year since the channel launched, which equates to 365 years non-stop, 24 hours a day of watch time. And said guy will actually be able to earn a better living than practically any other job on planet Earth? Nobody would believe you, yet here we are.
And I think a great textbook example, and I think an indicator about how to think about the EV market is think about what happened in Amazon. It went from $3 to $90 from 97 to 2000, and then it blew up and went to $7. Today, of course, it's $3,100. Perfect use case. And so when I put this together and think about EV and autonomy, this is a massive market. It's the transportation market, car market's $2 trillion, the broader transportation is additional $2 trillion. We're talking $4 trillion. That compares to the smartphone market at $500 billion. So it's understandable, the enthusiasm around these stocks. I just caution that this will take longer than people think. And I would put it all together, Becky, and say this. If you're trading these stocks for a 1-year time horizon, that is a dangerous endeavor.
I have to agree with Gene here, although I don't think this just applies to stocks within the electric vehicle space, but just stocks and assets in general. A 1-year time horizon is just asking for trouble. There's so much uncertainty and volatility over short periods of time that anything could happen. I would have to say that people who are, quote, investing in EV stocks and planning to sell within a year aren't investors, they're straight morons. Nothing wrong with being a moron, by the way. Sometimes I do very moronic things as well. But we just have to acknowledge the difference between being an investor and being a moron. Being a moron, you can still make money, by the way, just saying, but it's very different, right? Introducing enormous amounts of unnecessary risk just because of a short time horizon, that's not smart. Might work out, but it's not smart.
Ultimately, if you're investing in these companies for 3+ years, that's wise.
Gordon, you've got a much dimmer
intellect. Oh, you know what? Just thinking back to my childhood, I'm pretty sure my mum said, don't interrupt people, and if you don't have anything nice to say, don't say anything all. Well, sorry mum, but I choose to ignore that particular piece of advice. Sorry.
Gordon, you've got a much dimmer view of all of this. You think it's just gambling at this point. And Gene makes the point that if you're looking at the short term, you could face some pretty significant ups and downs along the way. But what do you think longer term for the EV market overall?
I mean, I think the EV market is a massive bubble. I mean, let's take Tesla. So if you look at Europe, right, we have sales for this year. Europe was the biggest EV market. Europe, US, China. Europe doubled in size this year. Tesla actually saw its total volumes in Europe fall. Why is that important?
Gordon, we've been over this, buddy. Okay, one more time. Make sure you're sitting down, paying attention and taking notes, okay? The one thing that matters is how many vehicles Tesla is selling, period. That's all. That's it. How many vehicles is Tesla selling on planet Earth? I really wish I didn't feel compelled to explain this, but just to make sure there's no uncertainty and no confusion among anyone watching, let me explain this once and for all. First of all, Tesla doesn't currently have a factory in Europe producing vehicles, which means every single Tesla, 100% of the Teslas sold in Europe currently are being built in factories overseas and shipped to Europe. The same is true of most other countries on Earth because Tesla only has 2 factories currently producing vehicles on the entire planet. That means that sometimes vehicles are shipped from this factory to this country, other times they're shipped from this factory to a different country. You understand that might cause a little bit of fluctuation in the month-over-month, quarter-over-quarter, and year-over-year delivery numbers. What Gordon's attempting to do here is support his thesis by cherry-picking and manipulating data. Gordon, we're not buying it. I could discredit this thinking or lack thereof from Gordon in a number of different ways. I'm not even going to bother because we don't need to. We can go back to first principles. Once again, I ask the question, is Tesla selling more vehicles on planet Earth than it was last quarter or last year? If the answer is yes, then shut the fuck up because that's literally the only thing that matters.
Europe is the only market with competition. So when you see competition, Tesla is being outsold. The ID.3, which is VW's new EV, is selling more than Tesla's Model 3, and the Porsche Taycan and the Audi e-tron are selling more than Tesla's S and X in the luxury market. Listen, if you look at the BEV market, it's only 1.8% of EV sales, despite, and that's from 0.47% in 2009, despite billions of dollars in incentives. And if you take a step back and look at NIO, I mean, this is kind of crazy. NIO's stock is trading at a market cap of roughly $98 billion, above VW. NIO sold 47,000 cars this year. VW is estimated to sell around 10 million cars, roughly 175,000 EVs. And the other thing with NIO is, and you got to look at the details here. You can't just say people being in the stock for 3 years. NIO is effectively promising people a free battery if they buy their car. And that's roughly 30% of the cost of the total car.
I almost find myself siding with Gordon on one point here, and that is regarding NIO stock. Their valuation is absolutely fucking insane. Now, I'm not going to rain on anyone's parade here. I actually think that NIO will do pretty well over the long term. They've got lots of execution risk ahead of them, but they're in a good position to take a reasonable share of the Chinese EV market. Good for NIO. But when I take a bird's eye view and weigh NIO stock against Tesla stock in terms of value, not the price, not the market cap, not the stock price, none of that, value. What do I mean by value? Well, I factor in things like risk, track record, execution, these kind of things. I realize, okay, they've got the best engineers in the world. They're led by the best leader in the world. Okay, Tesla, pretty good track record. They're fairly far up the mountain. Awesome. I look at NIO, they're still at the foot of the mountain. Again, they could do very well, but we have to call a spade a spade. If Tesla stock's overvalued, then NIO is just a joke. Where I take a major issue with Gordon is when he implies that NIO are effectively giving away a battery with all of their vehicles, referring to the battery swap technology. Gordon, surely you know there's a subscription for this service. They're generating revenue, which is spread out over a longer period of time. Again, just trying to cherry pick and manipulate the data. And by the way, in case you guys haven't noticed, Gordon has a very clear tell when he's attempting to deceive or straight lie to people. He prefaces what he says with, essentially. That way, he's got a get out of jail card. Well, I didn't actually say the battery is free. I said essentially, because essentially it's free because, battery swap and I didn't lie. I said essentially, f*** off.
So if you look at the actual margins of this company, you're talking about margins that are going to be grossly negative, yet analysts are saying buy this stock for 3 years. We think people are being misled. And we think as the competition comes in, we think guys like Tesla and NIO, who can't match the manufacturing prowess of the VWs and GMs, are going to literally get crushed. And we think that, like you said, what's driving this market really is you see a lot of retail traders trading options that shouldn't be. You sign up to a Robinhood account, you put in $2,000, you can trade options on margin. You're talking about 11 times leverage on an option we looked at just last week. So if a guy puts in $1, the guy writing that option has to buy $11. That's driving the stock market. That's enabled by the Fed. When the Fed cuts rates and they stop all this money printing into the market, we think you're going to see a number of bubbles explode, including the EV bubble.
Gene, that's a lot to kind of go after and
yes,
counter.
I'll take one
What
piece
do you think?
of it.
Is it the stimulus checks and the Fed that are driving these?
Well, let me maybe just go back and take one piece that is it's a passionate view. I can appreciate what's happened in Europe. Tesla's cars are too expensive for many countries in Europe right now. That's a problem. Has impacted market share. Ultimately, they're going to continue to reduce their car costs with their existing lineup and come up with a Model 2 eventually. That's probably a year or two away. So I think that will revert. Keep in mind, they've maintained 80% market share in the U.S. Maybe instead of going line item by line item, I just want to bring the conversation back to a very big picture. And this is just tend to how I think about investing. Is the car industry going to be turned into a different direction the next decade? I think that's obvious. EVs and autonomy, that's going to happen.
Looking at the big picture is incredibly important when investing. For example, if you have absolutely no idea that we're getting off fossil fuels, that electric vehicles will become the future, you might be looking within investments in the fossil fuel industry thinking, which of these companies is the best one to invest in compared to all the others in this industry, while missing the fact that the entire industry is the fucking Titanic headed for an imminent iceberg. Big picture thinking can help us make more informed decisions and notice trends. For example, growth or decline. One great example of this would be the fossil fuel industry. I can tell you guys with great certainty that the majority of fossil fuel based companies that are currently listed on stock exchanges around the world, their stock will be worth less at the end of this year than it was at the start, and less at the end of next year than it was at the start, and so on until they're all bankrupt. Yes, there'll be a couple of exceptions, but on average, they're all going out of business this decade. The same can be said for internal combustion engine vehicle producers. Most of them will be out of business before the decade ends. All of them will see enormous contractions in their overall business, and very few will actually survive the transition to electric vehicles. As Gene would say, the transition to electric autonomous vehicles is an undeniable truth. So you probably don't want to be on the wrong side of that transition.
And then the question is, and this is really the substance of the debate, is will Tesla and NIO and some of these other companies have tech leadership? I think that they fundamentally do. We break down these cars. We look very closely at what the other auto companies are doing. And I think Volkswagen's made a lot of progress, but I think that other car companies are going to have a really tough time. And then you start to layer in Apple's going to come into this market too. This is not hype around what's going to happen around transportation. It's going to be the most obvious and impactful way that tech is going to change our lives in the next decade. Yes, there's going to be massive swings in some of these stocks, but I see a new form of leadership coming out of that with companies like Apple and with NIO, Tesla.
Let me just ask you, Gene, if we do see more and more adoption of EV vehicles, even if we meet some of those really rosy expectations, how much of this is predicated on the idea that a Tesla or a NIO or these other companies will control that market share? And what does that mean? Are you thinking that the GMs and the Toyotas are not going to be able to get any piece of this?
They'll have a piece, but I think you're going to see companies that have been around for 100 years be a much smaller piece. I think that some of them may even go away in a decade. I mean, it was blasphemy to consider that Nokia and BlackBerry would go away when Apple got into the market. And that is, I think, was an important learning for me. Just because companies have been around for a long time doesn't mean, and those companies are complicated. Their workforce structure, their dealer networks, the technology that they have, they're not software core experts. The vertical integration has been a powerful plus for Tesla, NIO. It will be for Apple when they get into transportation. And I just think that when you put all that together, yes, to answer your question, I don't know who's going to be the winner within these other companies, the existing auto companies, but I suspect they're in a tight place and it keeps getting tighter. And last quarter, overall auto was down 5%, Tesla was up 61%. I think that's an indication.
Great point here from Gene. The data's there. All you need to do is look, and it becomes increasingly obvious that the transition to EVs is inevitable. Not possible, not likely, but inevitable.
Hey, Gordon, let me just ask you really quickly. Tesla and the other EV companies have defied all odds. Every argument you laid out against them, they run right through it.
I honestly don't know how Gordon keeps a straight face when his abhorrent train wreck of a track record in predicting movements in Tesla stock and the industry in general has been completely off and is being mocked and ridiculed so openly on CNBS.
Would it surprise you if they continued to run this entire year? All
right, guys, get ready for it. Gordon Genius Johnson's about to whip out his unimpressive party trick called question dodge. Watch.
Would it surprise you if they continued to run this entire year?
I gotta disagree with that. I mean, if you look just at stock price, yes, but I want to focus on, Gene keeps talking about technology. Everybody said Tesla has a technological advantage for years. That's completely false. They don't make their own batteries. They buy batteries from CATL, Panasonic, and LG. Anybody can buy those batteries.
Holy shit, dude. Where do I even start with this? Okay, just on the battery cells thing. I mean, maybe you guys have heard about Tesla's Battery Investor Day, where they unveiled plans to more than halve the cost of the battery cells. These battery cells are already being produced. They were for months prior to Battery Investor Day. They will be in the Made in Berlin Model Ys rolling off production lines later this year. But Gordon does have a point. Prior to Battery Investor Day and Tesla moving into their own battery cell production, they were in fact buying cells from other suppliers that anyone else could buy. But Gordon, if that's the case, but Tesla doesn't have any technology of their own, why would it be after Tesla gets these cells, then integrates those into packs, then into the vehicles, then thermally manages them, blah, 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 blah? Why is it that Tesla magically somehow is able to get much greater range from the same kilowatt hours than any other company on the planet? If they don't have any technology of their own, then that seems a bit weird, doesn't it? Surely everyone should get the exact same range if Tesla doesn't have any unique technology relating to batteries, right? Right. Now, this, of course, is not actually the point. The point is everything else that Tesla has developed, all the other technology that has allowed them to have an enormous lead. Tesla literally makes machines to build parts because they can't even get machines to build the parts they need because nobody makes them. So that might suggest that Tesla has some other unique technology. Never mind the self-driving AI chip that Tesla developed in-house. Never mind the full self-driving software that Tesla's developing in-house. Never mind any of the other trillions of examples of Tesla being extremely vertically integrated and having technology that makes them an enormous leader in the space. Let's forget about all of that and just pretend that because Tesla was buying battery cells from other suppliers at some point in the past, that they don't have any useful technology of their own. Come on, Gordon, please do better than that, man.
I can send you 5 examples of real world tests that were done where Tesla's range does not outpace that of other automakers. And let's take a step back. Look, he's saying that Tesla is going to rule the day.
I was looking for a quick answer on the stock, Gordon. We're out of time.
Now, maybe I'm imagining things here, but I kind of get the impression that the subtext, the subtle underlying communication from the host here is, Gordon, you didn't answer my question, dickhead. And by the way, we're out of time, so please shut the fuck up. Let's see if Gordon picks up on this.
He's saying that Tesla is going to rule the day.
I was looking for a quick answer on the stock, Gordon. We're out of time.
Yeah. No, I just think that, again, if you look to Europe where we've seen competition, Tesla's market share went from 20% to 7%. That competition is coming to China where their market share went from 25% to 12%. And you're going to see it in the US. So when you see competition, Tesla is getting beat. And when you say they're beating every estimate, Elon Musk said in 2018 they were going to sell 1 million cars this year.
Gordon, I'll ask you next time for a quick answer on the stock.
2020, 499,000 cars sold. So they missed the estimate. So I think you need to focus on what's actually happening versus just the stock price.
Okay.
So as most of you will know, Tesla originally set the goal to deliver 500,000 vehicles in 2020 back in 2014 when they announced the Gigafactory. Then in 2019, before the pandemic, Tesla reiterated their goal of delivering around 500,000 vehicles in the year 2020. Then a pandemic happened. Tesla had multiple factories shut down that weren't even able to produce vehicles, and yet how many vehicles did they deliver for the full year despite these obstacles? Well, what do we have here? 499,550 vehicles delivered. You round that up, 500,000. What's this I see here? Final numbers could vary by up to 0.5% or more. How interesting. So let's see what percent of 500,000 was 499,550 vehicles, just to see whether or not Gordon Johnson is nitpicking and trying to spin a false narrative, or he's being reasonable and honest in what he's asserted. 499,550 vehicles, divide that by 500,000 times 100 to get the percent, 99.91% of their target. That effectively rounds up to 100%. And keep in mind, Tesla said their margin of error, the variability, could be 0.5%. So if we add 0.5% to this just for fun, that's over. Of course, we could take away 1% as well. It'll be close. The point is, Tesla met their target. There was a fucking pandemic. They still hit their number. The end. It's deceptive to suggest they fell short of their deliveries target when they met it at 99.91% despite the pandemic and forced factory shutdowns, which they weren't accounting for when they set their guidance. Now, I don't know who's paying Gordon Johnson's bills, but I tell you what, for the amount of embarrassment this guy's asking for, the amount of ridicule he deserves, it's probably not enough. And by the way, guys, since we're talking about Tesla's deliveries, let me know in the comments below, how many vehicles do you think Tesla will deliver in 2021? I'm Stephen Mark Ryan, this is Solving the Money Problem, and I love you all. And don't forget, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each.
And if you're in Australia, the UK or New Zealand, you can get a free stock with stake also using the link in the description. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. PS, if you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.